Currency, it's the largest and most liquid market in the world. I'm Brigid Taylor, and this is Currency Wars. Let's take a quick look at the notable highlights from the past week. The rand continues to trade within the current range of 10.60 to 10.75 amidst a benign global backdrop, with weaker levels seen this week as the United States data produced stronger results and China disappointed. This dragged commodity-based emerging markets lower. South Africa's Purchasing Managers Index rose to 51.1 in August. This snapped a 4-month contraction after the resolution of a protracted strike amongst metal and engineering workers. The NAMSA vehicle sales for August showed a year-on-year contraction, easing marginally to -1.4% from -1.5% in July, highlighting headwinds from subdued economic growth and pressure on consumers' disposable income. The pace of the growth in the United States manufacturing sector accelerated in August, with the ISM Manufacturing Index reaching a 3-year high of 59. This is a marked improvement on the July figure of 57.1. The survey revealed considerable strength in the orders and production subcomponents, with most of the buoyancy attributable to domestic demand. Growth in China's factory sector slipped in August, with the Chinese PMI printing just above 52. However, stimulus measures implied in China are likely to support the Chinese economy in the fourth quarter. Whilst expectations for rate hikes are expected to become evident in the United States in 2015, the EU rates will remain subdued as a result of weak growth in the region. This will keep the rand vulnerable to the United States dollar, but better performing against the cross rates. This should support a flat rate outlook in the medium term from our South African Reserve Bank. Now that we've had a look at the news making headlines, I'm joined by Sluis-Cremer from RMB and Danny Pienaar from Micromega. Welcome, guys. So we've had an interesting week. I think we were talking offset in terms of, the cross rates and what's happening with regards to the rand relatively being range-bound. I mean, there's absolutely nothing in it. We've had the PMI data out with regards to China, looking at the South African markets. Let's just talk about the general economy. So the rand still remaining within that current range. However, those vulnerabilities still remain. I mean, those are being highlighted. What is your view with regards to that range? Do you think we're going to go outside of either side of that, or do you think it's going to be status quo?
I think if we don't get out of it soon, that the celeb gate and the broker gate, as we put it this week, with some jokes going around, that's how quiet the market is. So the rand basically now 65.75 within the broader range of 10.50, 10.80 or 10.47, 10.85, however you want to see it. We do need to break out of it. The risk always persists in the rand, and I think it was highlighted yesterday when the Ukraine news came out that there was a peace deal and the rand dropped down to 67, and then they came out and said there is no peace deal, and the rand was back up at 72, 73. That, I think, sums up the excitement for the week. On the rand base, I do think we'll break out of the range. I'm not sure whether we will do it this week. I think that the range is narrowing, so that's always an indication that we are getting to a point. So 65.75, we start breaking out that, we might see a little bit more volatility above and beyond those levels than we did before. But the main play really has been on the crosses. I think we've chatted about that before, and Jan will also come in on that one. But Euro Rand and Sterling Rand, we've had a look at that for a while. Yeah. They seem to be going nicely. They've broken out of their ranges. Yeah. So Sterling Rand at around 17.5. We still look for further strength there. And the impact on the rand is not so great. So even if the rand stays where it is, really, I still look for further momentum in the crosses. But on dollar rand 65.75, and yeah, the vulnerability still exists. The economy is weak.
The economy is weak, and I mean, if we look at the data that was out over the last week, once again highlighting that the US economy, out of all the developed nations, is starting to show some form of growth. I mean, we've seen, the UK coming on board, the eurozone remains benign. I mean, we saw German bonds coming off in the last week, which is something that traders are not used to. What is your view with regards to that anomaly between the US and the eurozone, and specifically as the eurozone's our major trading partner? Yeah,
look, eurozone is under immense pressure. I mean, they printed CPI or inflation is at 0.3%. I mean, they'd probably ideally like to have it around about 3% mark. So, what does the ECB do? I mean, President Draghi spoke 2 weeks ago in Jackson Hole about, the possibility of putting an asset buyback program in place. But, we've got to wait and see on that one. But, I mean, I think fundamentally Euro's under pressure. Janet Yellen, Fed chairman, has said that the US has turned a corner. I mean, data is looking good. We're going to have non-farms tomorrow, which is probably going to print again above 200,000. So, you know.
So good impetus in the United States. I mean, if we look at our other major trading partner, China, you know, there was a bit of disappointment around the PMI data. However, it looks as though the stimulus measures that were put in place will start to filter through now into the fourth quarter, which does obviously help the commodity-based emerging market currencies as ourselves. However, that benign global economy continued through 2014, despite the fact that we were hoping to have turned the corner. So going forward, I mean, if we're looking at opportunities for investors, and particularly guys that are importing and exporting in the currencies, a lot of those really are, and we talked about it last week again on the show, is in terms of the cross rate. So let's talk about the opportunities that have presented themselves with particular reference to the weaker economies like the eurozone, with the rand that's within that range.
Absolutely. I think, as Jan mentioned, that the state's probably looking to hike. I don't see it as happening just yet, but
the market's pricing 2015, right?
Yes, yeah. Well, but possibly, I don't know if it'll be. In my view, I don't know if it'll be that quick. So I think rand still will stay fairly stable. I mean, we have this speak of asset buyback programs in Europe, and we know the European economy is weak. So sterling rand, euro rand, and possibly even Swiss rand, and a couple of those guys, they're looking much better if you want to express yourself in terms of a rand positive view there.
So you're saying, in other words, that for exporters, look to transact sooner than later, because we're going to see more strength on the downside. Obviously, it's more an importer's party than an exporter's party right now.
Absolutely. I think if you see any kind of spike in the crosses from here, and we're looking at like 5 or 6 or 7% higher, I think you'd definitely look to get out. So sterling rand probably around 65, 70 at the moment. If we get it back up there, I think you'd look to sell. I don't ever see that happening. I think the market remains fairly subdued, and we just see this continuation on the move lower. The same with the dollar rand grinding away 65, 75. Just as per the rand in our economy, you know, we are still in trouble. I mean, we've slipped to 56 or something competitiveness for countries, and that's from, I think we were 35 a decade ago. So we have real issues here, but again, that pertains to everything we discussed. That has got more to do with leadership, with proper policies being put in place, as opposed to the actual economy remaining weak. We still have this issue with job creation. I think out of jobs, we were 144 in employment, 144 out of 144. So the risk for dollar rand itself remains separate to what we're seeing. At the moment, the euro is probably worse off than we are, which is why we're seeing this little bit of rand strength coming.
But as you mentioned, I mean, those vulnerabilities do remain, and I think that investors are cognizant of it. However, we are being forgiven. So as much as we talk about Fragile Five, we talk about being on the weaker end of emerging markets. We're a commodity-based emerging market. Commodities have come off. We're looking at our trading partners. Euro, very weak, benign growth. However, like we said, the rand remains range bound. So it feels to me as though the global economy is looking at the developed world to see where the impetus is going to come from. But the question then is, if we do start to see economies, the bigger global economies, particularly the likes of the United States, turning the corner and looking for interest rate hikes, how much risk do you think South Africa has in the system right now, with the fact that we are unlikely to see interest rate hikes, certainly at the next MPC decision?
Look, I certainly don't think, I agree with you there, we're not going to see an interest rate hike next week. You know, with this dollar rand in that 65, 75 range, you know, it's, as Dan says, it is going to break one of these days. Euro rand has actually been the interesting one for me of late, and we've been speaking about the weaker eurozone area. So that we've seen come back nicely. I just kind of think overall, globally though, search is still on for yield. You know, and if we take a step back to a couple of weeks back with the Middle East crisis, with what's happened in Russia and the Ukraine, had that happened a year or 2 years ago, the rand probably would have been at 12. You know, the rand has actually behaved very well, and even so have all the other emerging market currencies. I mean, in theory, Turkey should have run with it too. That's sitting at 215, 216.
But it's quite an interesting phenomenon that you're talking about, and I think that also goes back to a lot of, you know, with South African bonds being listed on the WGBI, because of those foreign flows, and as you mentioned, the hunt for yield, it keeps the rand within those relative ranges. However, that is, in my mind, quite a risk, just because of the fact that, I mean, we've recently seen the banks being downgraded. We are a negative watch. These are issues that we must keep at the back of our mind in terms of going forward, and where South Africa fits with regards to managing current account deficits, employment rates, all of the infrastructure issues that are obviously plaguing our economy. We're looking at Eskom potentially unbundling and becoming privatized, etc. So all of these types of issues aren't going away, and yes, the market is forgiving all of that because there's nothing happening. So, you know, where to from here? Let's just wrap up in terms of the global picture. We've got, we've had interest rate decisions out of the ECB and BOE. We've got the Fed unlikely to do anything dramatic. MPC next week. Let's just give a highlight in terms of where we see, what we see the Rand performing, and in terms of the foreign investor flows that we can expect to see.
I think for me, the Rand's kind of behaving like the little boy is naughty at the moment, but no one's noticing it. So we're in the corner, we're okay for the time being. Those risks do exist. Current account combined with how much money actually is here. If interest rates do eventually go high in G10 world, the dollar Rand will suffer. That's main and plain to see. That remains a very real risk. But until that happens, then as you say, we've been forgiven for it. I think that's just been ignored at the moment. So there's a bit of yield play, as Jan said, coming into it. In the short term, trying to take advantage of that. But when hot money leaves, we've all experienced that it can hurt quite a lot. So for me, in the short term, the SARB's not going to raise anything next week. I don't think they're going to cut. We stay pretty much range bound, probably 60-80 overall with small overshoots. And for the general economy, we need to see it start moving. If we are stagnating, and until we see generally things picking up here in terms of growth and employment, those risks in terms of current account and those risks in terms of hot money leaving will continue, and downgrades will continue to just fester under the surface. And when we get a little bit too naughty, someone's going to notice in the corner. I
agree. And what do you think? What's RMB's view with regards to the interest rate decisions going forward for the remainder of the year?
The RMB's view is still that rates are going to go up. I think for the moment, as Dan says, next week is going to be let the lag follow through and see where we are. But I think it was, upfront, RMB said that, 150 points, and we've seen half of that done already. So there's probably still some more upside room, but I think they must just wait and see what's going to happen first. You don't want to rush into the hiking cycle.
No, sure.
Also, I think if they hadn't downgraded the banks, I think that they're probably still looking to hike next week.
Yeah.
I've got to be honest. If that didn't happen, if Moody's didn't come out and surprise the market like that, then I think that they probably would be looking to hike. But I think the spotlight's on that now in terms of growth and how weak the economy is. So perhaps we just pause.
Right, now that we know where we stand, it's time to look at the levels for the week ahead. Rand pretty much benign. So let's talk about the crosses. Let's look at where we can expect to see some opportunity. I'm going to lead off with you, Yanni.
I think I'll do Euro Rand, Dan, you can do Sterling Rand. On Euro Rand, we've seen a nice run of late. I still kind of think down at this 1402 level where we currently are is a bit of a bit of support level. I think a daily close below that level, we target 1390, possibly even down to 1380. And if we get any upticks towards 1420, I think it's now become a good sell again.
Awesome, thank you so much. And mid-cable Rand?
I think pretty similar. I echo Jan's views on Euro Rand. Sterling Rand, we've had a nice move, however. We're down 60 cents from what we initially said we were looking to sell. I do think there's a little bit more room on the downside. At one stage, I mentioned to you that we're probably looking for a 16 handle. Dollar Rand will have to break the downside range for that to happen. Until that does happen, and if Dollar Rand doesn't do that, I think that you're probably looking at 1735, 1740, and any move to 6065 now topside will be met with sellers. So on the Sterling Rand, 4070 for the week, and perhaps a little bit more on the downside. On Dollar Rand, I look for 6080, possibly 63.78 with inside that. Any move above 87, just be wary of that. That'll be worth 15% on the top side, and the downside will be worth a little bit less, but it needs to go 47.45 before we look at that. And if anything, I don't see it changing just yet.
Okay, so basically in conclusion, the strategy for the week is that we can expect the Rand to continue to remain range bound. Still looking for that 1060, 1080 level. Watch 1087. Dan says it'll be quite a significant level on the top side in the Rand. However, the bigger move is really on the Euro. Jan's looking for a break below 14, potentially down to 1390 and even as low as 1380, and looking to sell upticks towards 1420. On your pound Rand, however, we've also seen a good move. If you see moves up to 1770, look to sell with opportunity down to about 1740. Please feel free to send your questions or comments to @CNBC Africa, #CurrencyWars410, or to myself at Brigid Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.